there's $100 million that's out there that is sole purpose is to build Amazon businesses with the assistance of sellers. All right, so good. Hey guys, it's been a hot minute since we've been doing these things. I got with me my good friend Henig. I don't think I've actually ever pronounced your name to you, so I don't know if I've actually said that right.
You did pretty good, man. Most people screw it up. You did it well.
Well, how is it? Did I say it dead on, or?
I think you did. Henig.
Yeah, Henig. All right. What are other pronunciations that you get out of it?
Well, if you ever remember, there's a magician from years ago, Doug Henig. And so my whole life, everybody calls me, Don Henig. And I'm like, no, that's not the name. But it turns out at one point in time, I got bored and learned how to be a magician and did, magic shows for kids, all for fun, never made money with it.
Yeah.
And my magician name is Houdani. I've got a guillotine. I got everything.
Wow. So you're like, so now when you look at magic, when you see magic,
yeah,
can you already kind of figure out what they're doing or more or less, or?
I know what a lot of them are, but I'm just blown away at the balls of these people, how they do this in front of the whole audience or face, close-up magic. It's unbelievable how good they are.
Yeah.
And I have such appreciation with how many hours it takes to actually get good at one trick.
Yeah.
It's unbelievable amount of time. I love watching magicians.
My thrill in magic was about I was 19, 20. No, I was drinking already, so I was probably 21, 22. I was working at a bar, and I learned a series of card tricks. So I would have this loaded deck just ready, so I could do one after the other. I cannot remember any of these.
Yeah,
but it would always piss off the other bartenders because I was never cleaning, because I was always just like sitting there entertaining people. But I would get the tips. I'm like, good, these people happy. This is
ding, 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 ding.
My favorite one was, and we can talk business sales. I'm gonna get through the story. My favorite one was I would load it up where they would always pick the queen of spades.
Yeah.
So then I would have to look for the card, right? So I'd look for the card. I'm like, is it here? No. Is it here? No. And then I'll go, is it there? And then we'll look up, and I had taped. I shouldn't say I taped. There was taped onto the ceiling the queen of spades. So then obviously it was like the stupidest joke. But when you're talking to like half drunk people at the end of the night, I mean, that's like I'm the greatest magician in the world.
Exactly. That's fantastic.
So the topic today, we're talking about like how to be able to fund growing businesses, and that's something that you have an area of expertise based on just the business that you started for it. I met Don, like almost 2 years ago now, huh? God, time is so weird. It was in New York. Yeah, it was.
Yeah,
because
exactly.
It wasn't last September. It was the September.
I think it was last September, I think.
What are we? So it's going on a year.
It's going to be a year. That's what it is.
Okay.
Less than a year. Wow.
Yeah, that is really crazy.
I feel like I know
so long ago, but then when I think last September, I'm like, shouldn't that just be like that? Like that should just be like 2 weeks ago or something like that. But holy moly, that was like, man, I've had a long year. I really had a super stretched last 12 months.
It feels like we know each other though for years.
Yeah, I know. Well, I think we just we connect on a lot of levels, So I mean, a lot of times I just get where you're coming from, you get where I'm coming from, and it works like that. So tell a little bit about AccrueMe and what you guys are doing for Amazon sellers for the most part. Because business model is very intriguing.
Yeah, it's crazy actually. So what we did was we looked at Amazon, and we everybody wants to be involved in Amazon. So just reality. So we looked at the finance side because that's our backgrounds. And I literally said to my partner, I don't want to be involved in anything unless it's good for the seller and good for us. It's got to be good for the seller. And we looked at all the lending options. Some of them are okay and all that, but we tried to do something different. And what we came up with was something that's never been done before. Most people would say it's absolutely insane, but we came up with a model to double the seller's capital, take it all, but we'll double their capital. No interest payments, no payments at all, no credit report, financial statements, no personal guarantee, no loss of ownership, That's the crazy part. No loss of ownership. And, we'll double their capital. We just take a percentage of profits for as long as they want to use our money.
So run by like a scenario where that would come into play.
Keep it simple. Let's say the seller has $10,000 of capital. By capital, I mean like inventory at cost, due from Amazon, call it $10,000 in total. And we give them $10,000. And let's say they're earning 20% ROI, just keep it simple. So on their own, they would earn $2,000, right? I mean, 20%, call it per month. Now they have our $10,000. They're also earning 20%. So they're earning $4,000. So, the next month, well, wait a minute, we have to make some money too, right? But there's no payments or anything. So what we do is, since we represent 50% of the business in that scenario, we only get half of whatever that percentage is in profits. So in that case, 25% of the profits just for that month. So in that case, we got $1,000. The seller got $3,000. So think about it. The seller has $10,000 of their own capital. On their own, they're earning $2,000. Now they just earned $3,000, a 50% increase. So they went from a 20% ROI on their money to a 30% ROI on their money. And now even better, when you get to month 2, what happens? Well, the $1,000 that we earned, we leave in the business. Unless the seller says, hey, take your money out. But we typically will leave in. Most people want that. So now we just increased our capital, right, from 10 to 11,000. The seller just went from 10,000 to 13,000. So we represent maybe 48% of the business, not 50. So in that next month, we get less percentage of ownership of profit. We get 24%. So if you looked at that scenario, that seller over 2 months would earn roughly $6,700. They never could have done it on their own. Never.
Well, now contrast that to like, so who's the ideal seller in comparison to, like, if somebody was going to, like, say, utilize their credit card for $10,000, utilize a bank loan? Is this in lieu of that? I mean, or in conjunction with that? How do you see that picture?
It can work together. So the real key is that the seller's got to be profitable. If they're not profitable, they shouldn't be taking anybody's money ever. Leverage, that's the first rule of leverage, is if you're profitable, you can use other people's money to grow. If you're not, you're going to go down faster. So it's a slingshot, either up or a slingshot down. So let's say they're using credit cards. That's fine. They can use credit cards, but we all know the deal. If you got to pay them off every month. Otherwise, you're going to get into a hole. And, just don't ever do that. Don't ever get into that hole. So what do we do with our sellers? Our sellers, a lot of them like to use their credit card. So they buy product. It gets to Amazon. We reimburse them and they pay off their credit card. Then they'll buy more. We reimburse them. Keeps going. So the money keeps coming back to them to pay off their credit cards. So they're getting the benefit of the points. They're getting the benefit of not having any balance. And they're getting the benefit of really building the business.
Now, and you guys are just only focused on Amazon and whatnot, or?
Yeah. For now, only Amazon, but we are looking at the other marketplaces as well, and various other ways to grow.
Okay.
Initially, we had to start somewhere, so we picked Amazon as the starting point.
I think, yeah. I mean, I'm a big leverage guy. Like in terms of both like just time and money, because I just feel like it's creating invisible money to me. It's like a money machine of just something that happens. And very true to what you said is that it needs to be an actual profitable business, because a lot of times I think people use leverage on unknown risk, where they'll go to the bank to take out cash, they do whatever, and then boom, they it's this risk on, and then that's where you're talking about, like, if you just leverage additional money on a proposition that ends up losing for you, you've just compounded your losses, and they're not your partner. They want that money, really one way or the other,
Yeah.
And,
so stay with that. You have a bad month, let's say. You still have to pay the bank.
Yeah.
And that can hurt. And I've been there personally, so I know how it can hurt. You have to pay. With us, we only earn money when you make money.
Yeah.
So if you didn't make any money, we didn't make any money. You didn't owe us anything. You didn't have to pay us anything. Nothing.
And see where I
We
like
earn zero. Whole goal is to help you make money.
where I like where you guys fit in is I think you're the solution as because like a cabbage, for instance,
Yeah.
is a very popular. I'm not going to say that they're predatory, but they're just super high interest. They don't really they're not growing with you. It was the business deal, it was done, and they grow by leaps and bounds. Now granted, I think over this whole COVID thing that but everybody that's giving out money's freaking out right now.
Yeah.
But I think that's where you guys are the gateway, like the door, like after traditional lending. I feel like that they don't have to go that route. They don't have to put their business at a greater risk. They can just partner with somebody. Is my thought process that right way, or am I extrapolating that wrong?
No, you're seeing it 100% right, but it's not just putting their business at risk. It's also putting their family at risk. So if you think about it, anybody that's taken out loans and now it's 6 months later and something went wrong, COVID hits and you can't send product in. What are you going to do? How are you going to pay that loan? And now, your family needs to do something, whatever it may be. The oil burner breaks. You need to use your credit card. The credit card's not available anymore because it's full. You're in a tight spot, and you have to make payments on top of that. You're putting everything at risk there.
Oh.
I understand it. If you're really, really super profitable and you're taking out a little bit, take the risk. It's fine. But besides that, no.
So let's go through a different scenario. So somebody like COVID, it was actually very interesting for Amazon sellers because not everybody, I shouldn't say everybody, but a lot of people really made out like bandits. Like I have a friend who I think was it 12? 2 million. I don't think it was 12. It might have been 12, but I think it was 2. A million, but I think it was actually 2. I'm confusing 2 and 12, but I'm either way 2 million in a few months' time is an amazing amount of return that he had. Meanwhile, I also have other friends who rely heavily on, like they're just afraid to go outside. They're doing RA. They were going about in the world, and their little honey holes dried up because those stores shut down, which then shut down their businesses. So now they don't have any. So let's talk about that guy. Let's talk about that guy that doesn't have any sales. He's 10 grand. He's got 10 grand a year cash, right? That's 3 months, no income. What happens there? What's going on with that?
Yeah, it's a great question. I'll tell you exactly what would happen. First off, he doesn't owe us anything. He didn't have to make any payments or anything like that. We didn't increase what he owes us or anything along those lines. Nothing. We didn't earn a penny in that scenario. So what do? We sit with them. We try to figure out how we can help them. Truthfully, Shawn, and I think you know me well enough, I'm going to call you and say, what do we do for this guy? How can we help him grow his business? What else can I do for him? All we care about is we want him to make money again. We don't want him suffering. But even though he's suffering, he's not losing his family. He's not losing his car or his house because he's got some debt over his head. That's not the case. He's got, if we were the bank, he's got the bank calling him saying, hey, how can we help? We've got some people around us that know all stuff. Have you thought about, like I talked to you with one guy, getting him into groceries? Have you thought about this or that? We're going to help them grow the business.
Yeah, which is good. I mean, and that was like a big, that to me is why I love partnerships. I just love it in general. And there's when you're dealing with like partners, and Lord knows I've had my fair share of like really horrible. I'm trying not to swear. Horrible.
People won't recognize you.
Horrible partners. So I really know what a good partner looks like. And for me, it's somebody that can complement. Like where are the weaknesses? Who's got the strengths? And you're working in concert towards a common goal. And that's the thing. And for me, when you're looking at like any particular credit card or cab or any of these, any lender in general, that there's not a common goal. It's a relationship where their interests are not inherent towards your success.
Right.
It's just that transactional relationship, and if you can't pay, screw you, pay me anyways, and we're going to go after that. And to me, there's the emotional distress of debt, right? Is to me, like I'm not like I'm very emotional about money, and that's why I do very well when I'm in scenarios of where I have financial partners where I can then think more structurally on their risks,
Yeah.
right? And all that other stuff. And because if I took on an enormous amount of debt, I can't now think functionally about on my business, because now I have this greater fear of ruining my existence and stuff like that, but that scales even at a small level, where for some people, like taking on a $5,000 credit card, $10,000 line of credit to start their business and whatnot, that's of extreme risk to them. Now, when they've succeeded through that, now they might already have a business now that can churn $10,000 a month, but the need for capital is still there. Particularly, I find for the Amazon seller in general, almost after like the first year or two, where they spent time building up their business, but now they struggle with the financial aware of like when do they start taking money out? There comes a point when you have to start thinking about business and personal. And we have a partner in business, like where I see AccrueMe fitting in my big circle going back around, where I see AccrueMe fitting in from the partner standpoint is. They're helping with the financial outlook. Yeah, you know what I mean? Like that, like here you can leverage money without the emotional stress, so you can think more structurally about your business. And then Lord knows, hopefully they have tools and all that other stuff to be able to provide for you to say, here, let me help you even be better at what you're doing. Dude, there's nothing. People pay thousands of dollars for that type of stuff, and they don't get any particular type of return or guarantee in exchange. So that's why like the second I heard about your business model, I was just a big fan, of it. So,
to stay with that, when we first started the company, we had our first team meeting. I will tell you something that I said to our team. I said flat out, I said, all right, general rule from day one, anybody comes to the table and says, hey, we can make more money if we do X. I said, I don't even want to hear it. Don't ever bring it to the table. The only ideas that come to the table is, our sellers can make more money if we do X. If the sellers are going to make more money, then we make more money. I don't care about anything else. But let me give you one other scenario. So think about the private label guys that are thinking about selling their business. They might be selling their business 2 years from now, 3 years from now, next year. Well, you know as well as I do that last year or two, the growth of that business is vital. It's everything. That's how you're going to take, if you're going to have, let's say, a 4 or 5 multiple on a $1 million business, that's great. If you're going to have a 4 or 5 multiple on a $3 million business, hell of a lot better. So how do you take that $1 million business and turn it into 3 million? You need capital to do it. But now if you take some capital and you're going to build that and you don't lose any of your ownership, at the end of the day, 2 years from now, 3 years from now, a year from now, you sell it and you get that 5 multiple and you earn $8 million. What are you giving AccrueMe? Hey, AccrueMe, here's your money back and your accrued profits. Thank you very much. No percentage of your upside. So I was talking to a guy the other day. He goes, everywhere I'm talking to, because he's a private label guy that has been running out of inventory, for various reasons, COVID, a lot of things associated, and he's planning on selling his business. Back and said, this is ridiculous. And he goes, I just want to make sure that I'm hearing this correct. You're not taking any percentage of my company. That's right. You own your company 100%. All we get is a percentage of the profits for as long as you want us in. If you want us in for 6 months, terrific. If you want us in for 2 years, terrific.
Is there any, because I know a lot of private label sellers, and I'm one myself. We don't just stick with one project.
Right.
I don't know if what would prevent somebody from like taking $100,000 and then starting a car wash with that? Do you have rules and stipulations about what can be done with the cash and whatnot?
Yeah. So let's say you have one product label product, or you have 3. Like one guy who's on board now, he's got 3 different private label products. They're all big. They're all in the millions. Mm-hmm. And he wants, and he's got them under different company names. All right. So he wants us to come in on all three. Okay,
Yeah.
great. So it's three separate scenarios. But what is he using the money for? He's got 10 new products, and he's launching a new product every day. Every 10 days. And he's got this whole big plan. This guy's he's worth $100 million. You know, he's done this before. He knows the numbers inside and out. It's really a beautiful thing to watch. I mean, it's incredible. But we are not giving him any money on these 10 new products. It's all a gamble. We don't know anything about them. So we're giving him money on the existing business, the existing products. He's taking that money and he's funding it. And what he said to me is, he goes, by taking your money, I'm going to be able to build multiple businesses without putting up any money. And in 2 years, I'm going to sell these businesses for over $8 million each.
Yeah.
And he's got the whole spreadsheet, everything done. He goes, and it's going to cost me nothing.
Yeah. It's free money. That's like when you have, and that's the thing, leverage, it needs to have like a functional, profitable means. But when you have something that's functional, like, cause I get that a lot of times, like people ask me, well, why would you take another option when you have like say a credit card or something like that? And then I tell them, what's your ROI? Why don't you do both? Because a lot of times when you're first starting out, there's way more opportunity than capital. Way more opportunity than capital. So it's like, if you have an engine that's spitting out like 10, 15, it doesn't matter, 1%, who cares? Like if it's spitting out anything, you are, in my opinion, reasonably foolish if you see the numbers and the availability to do it and not take advantage.
Exactly.
Some odd principle of Dave Ramsey told you to put money in an envelope 20 years ago. Stop.
Well, Dave Ramsey's around. Yeah, exactly. But Dave Ramsey's around because if you search, how do I pay off my credit card debt? 2.5 billion hits. He's around because so many people have gotten screwed with credit card debt.
Yeah.
If you look at 100 people, I bet you 98, 99%, if they, 100 people that used credit card debt for their business, to grow their business, I bet you a high percentage of them have ended up in failure.
Without question. I mean, even within the Amazon world, I mean, it's not, a lot of times these gurus pitch like it's this easiest thing in the world, but like at the end of the day, it's building Amazon. Like they see us in the house and they see all these things. They don't remember 6 years ago sweating in an apartment with like my living room filled to the wall with boxes and like the arguments and the tears and the frustration. And maybe we didn't show it either. But nobody ever. But like, there's a truthfulness to how hard something is, and when you put on, I came from a background of finances already, so I came into this thing, I think, much more financially astute than your average person, and so I get it. I get the arguments when people start talking Dave Ramsey because they have this negative aspect of credit cards because they ran up a credit card bill in college. But like your credit, when you go out to dinner, if you're spending money that you don't have, that's not adding income to you. That you don't go back to work and get a pay raise of like 10% because you're using your credit card.
Right.
Well, that it's definitely that's so true of business that you get to have, like, you get to take money, apply that money towards something. Grow I don't know, man. It's just a wonderful scenario. I do. God bless AccrueMe.
Wait. I want to add on to this for a second because here's a unique thing that you and I have not talked about.
Okay.
That some of our clients have done, and we're fine with it. They've used credit cards, and again, let's take that seller $1,000 in capital.
Yeah.
And he's got more opportunities. He can get all the product. He can make the money. He knows what he's doing. He's busting his ass. He's killing it. So he's got 10 grand. Now he borrows 10 grand on a credit card. What does he have now in his business? 20 grand. From our standpoint, he's got 20 grand of capital, of money and inventory. So what are we going to give him? 20 grand. You talk about blowing out a business.
I didn't even think of that. What do you guys, what is the math? Like, it was 125.
Yeah, we never talked about it. I don't talk about it much, but say it again.
What's the max of contribution that you guys will do for a business?
we'll go up to 50%. So, we'll match whatever they have. And, we have $100 million to put on the street. So, we don't really have a max, but I would say $1 million is probably our, the upper end of our comfort right now. But we have one that we have in the process for 250, no problem. 300, no problem. Good.
That's good. Yeah. So the bottleneck of growth right now is literally just getting the message out. So it's not a lack of capital. The capital is there.
Yeah.
And so the people need to understand that, it's just, you literally need to rewire how you think. There's $100 million that's out there that is sole purpose is to build Amazon businesses with the assistance of sellers. It's
That's it.
That's awesome.
Crazy. So, people, the biggest objection I get is the biggest objection I get, Shawn, is it sounds too good to be true. Mm-hmm. But it's all true. It's all real. And I go through it with them. You're right. It does sound too good to be true. If somebody were to offer you this deal, so we talk about it internally sometimes. Like, it's kind of funny. Let's say, using the $10,000 example again, you go to your rich uncle and, and you say, hey, I got this business. I'm earning a great ROI. I need capital to grow. And the uncle says, okay, great. I'm going to help you. I'm going to give it to you. What are the terms? All right, well, listen, I don't want to pay you any interest. In fact, I'm not going to give you any payments. I don't want to sign a personal guarantee because this is not personal. This is a business deal. I don't want you to own my company, but I'm going to give you a percentage of profits whenever I feel like it. And when I say when I feel like it, it's when it's right for my business to do it. Why would I give you a percentage of profits or make any payment in, September, October, November? I'd be crazy to do that. I need to keep building and building and building. But maybe in, February, March, I might be slower than normal. I'm going to have excess cash. The worst thing I could do is leave excess cash in the bank. So I'll give it to you then and lower your amount that's invested in the business. And what would the uncle say? He'd say, go F yourself, man. Get out of here. That's the best deal in the world. And that's our deal.
Yeah.
It's crazy.
So there's no minimum. I mean, there's no, they never have to. What happens if they fail? What happens then? So if a business just hits a dead wall and it fails, then the risk, you guys are assuming that risk then as well, yeah?
Yeah. So if you think about it, we're in at 50% of the capital, right? So if you think about the inventory, typically, if you were talking about a 20% ROI type business and you had $10,000, so you're talking about $12,000 coming in. Let's say it was, and $9,000 came in. All right, so we matched your $10,000, and now instead of getting $24,000 that you were originally expecting, you're going to take it a loss, and you're going to get 17 grand. Well, we're going to get our 10 grand back first. We take priority there.
Got it. Okay. Right. Which is fair. Which is honestly fair. Okay.
Yeah.
Okay, I got you. So I was wondering because I was always, where's the? You can't be just, we're not. Yeah. You're not like the tooth fairy. You know what I mean? There's a give and take.
Yeah, I can't wear a Santa suit.
Yeah, but that's pretty neat. So what are ways that you guys are educating Amazon sellers and whatnot? I mean, what tools do you guys have for them?
So truthfully, we are just out of the box. So when you and I first started talking, we were just talking to a few people. We didn't want a lot of clients. We wanted to test it out, make sure it worked. Make sure that it worked well, and it did. And we didn't know if people would pay us or not pay us or what. And now what we're finding is that have slow months, they like to pay. Okay, great, terrific. We love that. Not all of them. We just have a good relationship with them all. So it's just going well. I know I just got off track there, so I don't know what question I was answering.
No, you're fine. You actually answered it. I do that a lot. So then what happens is that I end up just staying on a tangent. And then in the back of my mind, I'm like, will I remember what I was saying? Or
exactly.
am I just going to keep going?
That's the way I tell jokes, man. As you know, I start them and I don't remember, but I'll
wrap it around.
It'll come back to me.
Nail the punchline.
Yeah.
So who's the ideal client for you guys?
typically wholesale, private label, doing anywhere from 10,000 a month to hundreds of thousands a month. Looking for anywhere from 10,000 to call it 250, and profitable. In business, minimum 6 months, but that's typically not a problem. We will actually, Shawn, we will go down to $5,000 because we try to help the smaller guy. We try to help them off the ground, and we've done that with a few, and we're happy to do it. But it's not the majority of it.
It's not the idea. No, I get that.
Yeah.
So are you? What's the underwriting process that you guys? What is expected of the seller? How do they validate to you who they are, what they've done? How does that all work?
So it's very simple. On our website, we have a button, apply now, or I think that they're changing the name of it, but basically apply now. And all it is, it asks like 3 questions. What's your monthly sales? What do you have in inventory? And what's your ROI? And then we come back with, this is what we think we're going to be able to give you. And if you like it, and here are all the terms, and you want to go forward, let us know. And then we ask for your Seller Central ID, access. So then we built the system. We pull in all the data. We built something called the Brain that we're going to be offering out to our sellers as well, because it's really useful. It shows you what products you really should be working on, and which ones you shouldn't, and which ones you should be dumping, and taking that capital and putting it back into good stuff. And so anyway, so we look at that, and then we come back and say, okay, you have $100,000. We're not valuing it at $100,000 because you have some garbage products here, and everybody knows. Nobody has been surprised. So day one, you have $100,000 of inventory at cost, and we value it at, let's just say, $80,000. So we'll give you $80,000. And what happens to that other $20,000 of inventory? It's excluded. So when it sells, you keep 100% of the profit.
Oh, nice.
Yeah.
Nice. Wow, that is a win-win.
We don't want any profit on something we're not with. So and then it goes to cash, and now you can get more money if you want.
Yeah, that's so interesting that you're solving problems at both ends, because you're solving a problem on the AccrueMe end of taking on bad, but then at the same time it's nothing but really upside, and that's fair. That's like a legit win-win.
It's fair. So like one guy, he had some pretty crappy products, and he's been sitting with them for months, and I finally called him. I said, "What are you doing?" And he said, "I can't get rid of these." I said, "Well, can't you get rid of them at cost?" He said, "No, whatever happened, he's going to take a hit, like a 30% hit." And he goes, "And truthfully, that means I'm going to take a loss for like 2 months or 3 months, and I'm worried that you guys are going to come back and kick me out." And I said to him, "No, let's turn it into cash, and let's get that money working for you again." And now he's over the hump. He did have a few months of a loss, and now he's over the hump.
Yeah. Well, see, people, that's another thing that people really get lost.
Better than ever.
Go ahead. I think we got a lag, so I think I was talking over you with the lag. But that's another thing that people lose sight of is they think of loss incorrectly. Like for me, it's cash flow. I look at cash flow, and within the cash flow am I cash flow positive or am I cash flow negative? And within that cash flow, there's going to be the products that get liquidated. There's going to be the ones that sell for a high return. There's going to be the ones that sell for a loss, break even. Provided when all that's said and done, that's where I get my return on. And I think people forget about that. Like when you go to a Boston store, when they actually were a thing, and you went to that yellow table and that was a thing, or the yellow table and everything was 80% off, they're not losing their money on that. They've already made money on that original purchase, and now that's just the last, let's get it out of here deal, of which then they can go back and put in the products that are actually profitable. So yeah, if you have positive cash flow, there's no such thing as a loss at them. I mean, there is, but not really, because it's all positive at the end of the day. That's a hard thing.
Let me tell you the way I look at it.
Yeah,
it is hard, but the way I explain it, and it's my world. If I own a stock, and I'm losing money on that stock. What do? Do I sit with it forever and hope that one day it comes back? Or am I smarter to take that loss, get the cash, and put it into something good and start making money? It's a no-brainer. Makes sense. We actually have built spreadsheets to show people and tools to show people that if you get rid of this and tell me what you think your loss is going to be. And, all right, let's plug that in. And then let's look at your other products, and can you get the same ROI on your other products as you would on this money? Take that lost money and put it back into your business. How many months will it take before you recover that little loss and start making money? It's typically just a few months. The longest one I saw was 6 months.
Yeah.
Do it all day long.
And even then, it's still, there's still cash flow that's going through.
So all we care about is helping them. Yeah.
That's the big thing. What am I think we covered almost about everything. What am I missing? What have we not touched on? What is there to add yet?
People don't know about us because we're just starting to do things like this. And I really appreciate you doing this. It's really very cool.
Mm-hmm.
Truthfully, we're just trying to get the word out now. And they're going to start reading about us and hearing about us a lot. And, right now it's bottom floor, if you will, ground floor. People are saying to us that, this is going to disrupt lending, not just, not just in this industry, but every
industry. Yeah. That's for me, everything's always at scale. And why couldn't this go into any industry that requires capital? There's literally nothing that you guys need to do other than figure out the process and then just recreate it for that new vertical, and away you go. And then you have even greater data, from that. So I see huge picture, billion dollar potential.
Oh, absolutely. So let me tell you what, in my mind, do you drive, you're driving on the parkway now or a highway, and if you veer out of your lane a little bit, they have those ridges now, right? Your tires hit those ridges and they go, boom, 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 it's going to wake you up. 10 years ago, before they did that, people would be in a tree before they woke up, and what'd you say first time you saw them? Like, why the hell didn't they think of this before? This is so basic. There's no brain surgery behind what we're doing. It's basic. It's common sense. It makes sense. And and people have said to me, well, how come we haven't done it like this before? I'm like, I don't know. There's always a first. So we're here.
Well, that's how I feel. Like, even like with working on the Cinch Can project, it's just such a simple idea. Like, no one's thought to put a bag in there automatic. Like, it's just, and it's and that nobody. I mean, and maybe they had, but I'm sure there's plenty. That's the thing. There's plenty of people that have probably had that idea for all of time. But
maybe.
Execution is what really counts at the end of the day. Because I've seen a million good ideas just fail because of the lack of execution or education or some other thing that is required of success. Not just replacing a household income, but actual monumental business success. And that what's cool about that too
exactly
is that for AccrueMe, and this is the other thing, when you're talking about the common goal, right? For AccrueMe to grow, it requires the growth of Amazon businesses at the same time, because at some point it's going to be fundamentally more important to scale the capital itself than even more people, right? Obviously people, but there's gonna be, you got width and depth going on, really at that same time. I just did it. I lost where I was going with that. So either way.
Great.
I'm sure on the replay when I watch it, that's the gem that
it was.
So how can people get a hold of you? How, if they're interested, how can they get started? What's that whole thing? How do you want the introductions and whatnot?
Sure. Our process is simple. They can email me, Don, D-O-N, at AccrueMe.com, AccrueMe, AccrueMe.com. Go to our website. You play around with the calculator. The calculator is great. you'll be able to compare how you'll do on your own versus how you do with us. And it's, same scenarios. You'll see what's one of the most fascinating things is that, remember that scenario I gave you, 10,000 and 10,000 and, earning 20%. So after, month one, you earned $13,000 and, altogether you had 13,000 in capital. We only had 11. So our profit percentage went down. So the way that this is built is our profit percentage naturally declines over time. So as your business grows, our profit percentage goes down and down and down. So we become a small part of a very big pie. And that's the way this is 100% set up. So go to the website, check out the calculator, send me an email, or click the apply now. There's no risk or anything else with that. With the apply now, it's like 3 questions. That's it. Go ahead.
I remembered where I was going with that. Is that for you guys to grow, Amazon sellers have to grow. They literally have to be successful. For you to stay successful. That's not the case with a traditional lender at all.
You're right.
That part of that profit is, if you fail, they still get to go after and liquidate your business and all and go after you. And that's part of they get to grow whether or not you fail or succeed. And they're not looking they're not looking at that point anymore. They're looking at the number. They're looking at scaling people, and you know what I mean, and just churning through people at that point, as opposed to just scaling capital. And I'm not with that mentality. I mean, I play a part of that mentality, but I also use it to my best advantage. But certainly I see the tremendous opportunity you guys are doing. I'm thankful that you're in the market, and I've been a huge advocate since I've known of it, and I just continue to refer you guys. Anytime people are always asking for lending, I just shoot them your way every time. Just because I believe in what you guys are doing. I think it's a good thing for the community.
And you know what we do? Thank you. And we have to correct people all the time that we're not lending any money. We're investing. We invest in business without taking any ownership. I mean, it's insane. Insane.
It's a partnership. It's a literal part, legally and literally a partnership. Except the partner doesn't even get any actual equity on sale. I mean, it's just right. Yeah, that's crazy.
Yeah.
All right. Well, I appreciate you. I'm gonna let you go. We're 15 minutes. Right. I was trying my best not to swear, because what I'll do is I'll put this on a little bit of a spin cycle on my pages, so you can guys get some extra additional exposure to the Amazon community and all that other stuff. So if you see any pop-ups, you'll get it. Okay, cool. And then if everybody knows how to get a hold of me. So if you have any questions, just hit me up on Facebook, and I'm sure I'll get around to you. Don, I appreciate you. I love you. I'm looking forward to finally hanging out again in New York, and we'll when all this whole COVID thing passes and all this stuff. So all right, man. Well, I will let you go. All right,
you're amazing, Shawn. Thank you really.
Appreciate it.
Really amazing.